Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, May 11th, 2023. It's now the 10th. We start off in the S&P 500 daily chart in DeMark looking back to end of December 21. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 3 count. And to negate that for end of day on the 11th, there must be a close below 4136.25 for the price flip to the buy setup count 1. S&P price opened pretty good today at 4143.74 and ticked higher. And then the bottom fell out sometime late morning, I believe, and it just sliced right through the conversion line and the baseline like they weren't even there. And then they subsequently moved back up quite nicely to close at 4137.64. So that's some pretty heavy intraday volatility there. And price just couldn't close above the 50% disqualified momentum up. And if it did so, that would have been qualified for end of day today, but no such luck. So the only level in danger of becoming qualified to the downside are both the ongoing demand line, which starts the day on the 11th at 4072.83, and the disqualified down 1 for trend factor is right there too, so close below both of those will qualify both of those levels. And there's familiar support at the Stark band here for lower Stark band, and the channel 3 low ticked up a little bit. It's at 4030.83 from 4027.53. And if price decides to blast to the upside, this first ongoing supply line, which for the 11th starts the day at 4185.78, would require an open above that level and a close above that level to qualify it. If not, and it opens below it, subsequently closes above it, it becomes disqualified. However, the one right above it, which for the 11th is at 4190.97, would become qualified with a simple close above it for end of day on the 11th. And here's a look zoomed out a little bit. The NASDAQ 100 NDXHILO shows the blue 5 EMA crossing above the red 10 EMA for a buy signal. However, it's not my buy signal, as the ROC 12, strangely enough, is headed down and is under -5 at -5.81. So I'm not getting into it. And especially the way the S&P 500 just sliced right through both the conversion line and baseline and then went back above it today like it wasn't even there. And we'll watch for a signal for the other way for selling. I like that one better anyway. And there sure has been a lot of chaos between the 5 and the 10. You can see up here a lot of up and down, some false signals, and one sell signal here, so we'll wait for another valid sell signal. And I've gone back to the inception of the QQQ, somewhere around the Great Financial Crisis, and there is no peak that looks as messy as this as it currently does now, so it's a good time to just sit back and wait for the signal to sell. The other way seems to work a lot better anyway. And the short-term KST did cross above its signal line. It's still below zero at -4.33, so that needs to get above zero. and the long-term KST is just headed up into the right-hand corner. It's fast approaching some of these nosebleed areas up here, so again, it's a little bit elevated on the long term, so best to just wait. Let's catch up with the S&P 600 small cap index. I'll zoom into the current area now. So the S&P 600 monthly chart is resting on an uptrend that I've drawn since the last time we looked at it. You can see it's drawn nicely right at the open of this candle, through the close of this one, and at the bottom of the wick of this candle here, and the bottom of the wick on this candle here, here, and here. So you can see already this month there was a breach underneath it, and it went back up, and it is hugging that line. However, the S&P 600 AD line, since we last looked at it, has gone under this uptrend line here. It fell below its signal line, and the S&P 600 monthly AD line has crossed below its 10 EMA signal line in blue and has crossed under this uptrend line I've drawn since last time we've looked at this. It did go under. Last time we looked, it was just barely above it, but it did make it under. It still has the rest of the month to get back above it. If not, it's in AD no man's land once it gets into the middle of this descending broadening wedge pattern here. And it looks like both lines of the descending broadening wedge, the top one and the bottom one, were ajar a little bit. Can't explain it, so I straightened it out so that they're resting on the top on these peaks. And then on the bottom we've had two minor whipsaws, one small one here and a rather larger one here. The NYA top color chart will focus on the NYA to SPX ratio, basically value versus growth. I'm going to zoom in extremely to this area now. So as we know, when the line goes down for this ratio, that means the big fat cap mega techs are ruling the roost, and value is getting trounced, and we've been going sideways for a while here. Value had its moment here but couldn't get above this resistance line in red there, and then growth took over and headed down. That brings us to here, and you can see the ever so slightest breach underneath this purple dashed line that I've tried to do everything I could to take the breach away, but it really did breach under that dashed line there. And that's somewhat unprecedented, and I know it's very minuscule, but it's worth watching, as by now, probably on this run up for value should have taken off, but it certainly didn't. So that shows everybody on Earth is piling into the big fat cap megatechs, and that brings us to today. So if it continues under that dashed purple line there, it could hit this red dashed purple line down here, and that's a support line that was started here in February of 2022, and it has not been breached to the downside, so this really bears monitoring here, and we will. The S&P 500 support and resistance levels big board chart shows the lone gray area at R2, and price in the aftermarket hours for the S&P 500 at 5:14 p.m. on the 10th is 41.38. So to the immediate downside is R1, 20 simple moving average, pivot point S1 daily baseline, daily conversion line. And to the immediate upside is the top of the range, 4164. Then we take a jump up to the daily ongoing supply line at 4191, and then the other one there at 4186. After that is the uptrend line at 4192, and the upper Stark band is right around there also. And the S&P 500 daily chart will print the D wave up wave 3 at 4187. So if we get up to these ongoing supply line there, that could possibly print the 3. And I believe in the weekly chart it's around 4195 for printing the D wave up wave 3 and giving us a higher high in the weekly chart. And this will give us a higher high in the daily chart. And the S&P 500 daily AD line is still slightly below its 21 EMA signal line. However, the NASDAQ 100 daily AD line did go above its 21 EMA signal line. ROC 1 is still in the green zone, hovering around 0. ATR2 is still well into its green zone and pointed up, and the PPO extreme is at 2.76, needs to get above PPO level 5, 2.99% above 0. And the New York traditional McClellan breath oscillator to get back to 0 would require 585 advancers over decliners to get back to 0. Another vast improvement, just about cut it in half, so it's just right under the 0 line of the traditional McClellan breath oscillator for the New York. Have a great day.